Welcome to another trading video. Today, many of you who have watched my previous videos know that my trading strategy is mean reversion on the Forex, mostly on the majors, but some of the minors too. But that is more a swing trading strategy. So what I will do today is I will share a video on what I'm looking for a trade entry day to day, every day. Now, most traders lose money because they overcomplicate. So in this video, I'm going to give you a simple strategy. If you stick to this, you will absolutely see profits. There is some risk management, of course, and there is strict entry criteria. And we'll go over all the trades that I've took thus far in the month of June. I think we've took 10 trades. You can see here we've had 9 winners and 1 loss, and you can see here our profits, and this is on a 10k account, and this is 22.45 is basically our risk to reward. So we've lost 1 trade at 1. And if we add up all our winners, this one was a 2.62 to 1, we've had a 5 to 1. If we add all them up, it totaled to 22.45. Okay, so first, who is this? Sorry, I've got an alert going off in TradingView. So, who is this video for and who benefits from this video? Anyone who's struggling to find consistency. If you just stick to this strategy alone, you don't need a big account to get started. You can start this with $1,000. I would always recommend that you start on a demo account, and I would also strongly recommend that you only start the demo account with $1,000. Whatever you plan and you're comfortable putting into the markets of your real money, that is what you should put into your demo account. Too many people maybe have $1,000, but they start demo accounts with something ridiculous. I think it defaults at 200,000. So the numbers you're seeing on the screen aren't reflection of the numbers that you will see on the screen when you start trading, only risking 1%, 1.5% on a £1,000 account. The numbers will be very small. So start the demo as the way you mean to go on. So the strategy, let's call it. What are we going to do to enter? Now, I'll just share what I use. I use basically a couple of indicators. They are just time-based indicators, so I know that this session has started, and I've also got this VWAP on my screen, and I like to see certain levels on my screen as well. So I'm just going to share the indicators here. So the first one I use is Pivots by LuxAlgo, and this is the settings here. Now what this does is it just basically plots out these orange lines on your screen, and you will be amazed at how many times the market goes to here and bounces or reverses. They're pivot areas. Sorry, I said this was by LuxAlgo, it isn't. It's a default TradingView indicator. The next one is by LuxAlgo. I'll open this, and here's the settings. It's basically the open range breakout, the New York open range breakout. Sorry, we have got another alert. So the open range breakout, I've got it set to 30 minutes. This helps the first half an hour play out. It filters out all the noise. Sometimes you see massive spikes in the beginning, and I like to wait. So if you're in New York, it opens at 9:30. I'm not paying attention until 10 AM. So in the UK, where I'm based, the market's open in New York at 2:30 in the afternoon, my time, and I won't enter any positions until after 3 PM. So here's the settings here for this indicator, and here's the other settings. Now that's just basically this green area here and this red area here. So this is the high and low of the 30-minute candle that printed from 9:30 to 10. Also, you can see here different colours. The only thing this is, you can see the day before here was green. So we'll just pull up an arrow. This day was green. So if this open range opens below a previous bullish range, it will be red. And if the next one opens up above, it will be green. That's all that means. It means this range is below yesterday's, and this green means this range was above yesterday's. So that's the second indicator that I use. The purple line is obviously VWAP, the volume weighted average price. And I've also got blue lines on my chart, and these are psychological levels. So if we're reaching a psychological level, which is 21,400, 21,300, 21,200, the market tends to react at these levels. You can't see them on my screen just now because we are at the beginning of June here, but you will see them as we go on in the video. So let's cover here. Now we've covered the strategy overview and the tools and the indicators that we use. Let's cover the exact entry rules and what I am looking for. So first, I'm on Nasdaq. Is the only thing I trade during the open range breakout, and I'm on the 1 minute time frame. Okay, so if we look here, 1 minute time frame, and this is a 30-minute candle. Maybe I will go to 30 minutes and show you this just so you understand perfectly. So this here is the 1430 candle. If we just pull our arrow, you can see this is the 1430 candle at the bottom, and this is the top. So after this prints, this green box is basically your first 30 minutes open range high and low. Okay, so we come back to the 1 minute and we'll just walk through the trades that we have took. Now it's also worth mentioning, you may see a short position in here, but I tend to only take long entries, and that's why you will see some days on here as we go through June, you'll see that I've not placed any trades because the Nasdaq at present, if you look at it in the higher time frames, 4 hours, days, week, month, you will see it's in a strong upward trend. I'm not interested in any short-term trends. I'm interested in long-term trends. So for me, I'm only taking long positions on Nasdaq, although you will see a short position on here, and I'll tell you the reason why I took that position. So we start watching here. As soon as this green zone comes, this is where we are starting to watch. And again, we're taking long position, so we're waiting on the market coming above this line. This is our level of interest. Some people will call it a POI, point of interest. So here, we've came above. Now we don't enter straight away as soon as the market pops above on a 1 minute candle. Okay, we start to build a story. Remember, we're on the 1 minute candle. So we're starting to build a story here. And as you can see, I've drew this black line. Okay, I'm aiming for this zone here, which is a pivot zone that we discussed at the beginning. This orange amber line. This is a pivot area, and this is where I want to reach, okay? So as you can see in the 1 minute candle, we're bouncing off this area. So I've drew this black line, and I've just put this black line here, and I'm building a story and creating a plan saying, okay, we've broke above the open range breakout, waiting some candles printing. Okay, we've now got some resistance in this area. Let's see how the market reacts. See how we come away back down. So if we had entered, let's say here on the break, with our stop just below here, we would have been stopped out, okay? So we are trying to build a story here, and we've got resistance happening at this area. Market comes our way back down. Now here, it not only breaks through, it breaks through with momentum, and then it breaks through our resistance area. So this is an entry, and that's the reason why I entered this position, and we got a 2.6 to 1 on this. Yep, it came to the pivot. We held this a little bit longer. As you can see, it's came right up here, and as this big bearish red candle came, that's when we decided to close the trade, just on this red candle here. So we were happy with 2 to 1, but as you've seen, this kept going, but we've got no context because the next pivot point is a way up here, and there is a psychological level here at 2,500. As you can see, that's exactly where it kind of rejected at the 21,500. So that's the context behind that trade. We will now move on to the next day and see if we entered a trade, and we can see that we did. We entered a trade here. We'll break this trade down and give it some context. So very much like the previous trade, you can see that we broke above here with strong momentum, but we dropped back down, and it came to the midpoint here, back up. So we've got a story here that we are creating some resistance. The market bounced off it here twice, came down. 2 of these candles bounced off it, rejected with big wicks. Again, we bounced off it here. Then finally, you can see it didn't almost want to go back down to the open range. Then it broke through with momentum. We enter. So a lot of videos out there will show you that you break straight away, you enter straight away on the break of the open range breakout. Again, I'll show you a second losing trade that we just showed you previously. We enter. Stop loss is likely going to be below these candles here, this area here, and we get stopped out, okay? So we need to wait, be patient. Again, remember, we're only in the 1 minute time frame, so let these candles do their thing and build a story for you. So again, that's another trade. We will go to the next day. And again, this is very good. It's a very good strategy if you're struggling for consistency. So we will just scroll across here to the next day. And as you can see, we had no entry here, I believe. Yep, no entry here. So that day we never took a trade. And it looks like on the 5th as well, we never took a trade. You know, and believe me, I'm sitting here watching these trades and nothing plays out. We don't take the trade. As humans, we're programmed to, you know, we're used to working 9 to 5. So if you're sitting in front of the charts, the human instinct in you tells you you should be getting paid for your time, because that is how we're programmed. We're programmed to go to work and get paid for our time. Trading, you don't get paid for your time. You get paid for opportunities when they present, and you preserve your capital. When you don't see an entry, you do not take it. Otherwise, you are gambling. So 2 days in a row there we sat and we had no trades. So as you can see here, we've had 2 trades on this day. Interesting. So let's break down these entries. So as you can see here, we've started to build a story before the New York actually opened. This may have been a result of not having had a trade for a few days. So as you can see, we've drew this little area here, knowing that, you know, there's no rules here. We don't need to wait on New York opening every time before we start building our story. So we can see here, we've created this box here, and we've placed it here, saying that this has been acting as resistance. The market is struggling to push up through this area, and it's happened multiple times. Look at all this cluster that could not break above. Again here, couldn't break above. And then with this big move down, and then a big impulse move up. Okay? And then when the New York opens, we break through. So that is when we do take an entry, because we've got our story here, pre-market or previous session, whatever it may be, but we've got a good resistance here that we've identified. We break through it with momentum, and then we enter. Another tool that I use, now if you don't have the premium, you won't have this, but you don't need it. But if you do have premium, you could switch to your volume footprint. I have mine set to delta, and this basically shows you the volume coming through on that candle. It will show you the volume, the buyers and sellers. It's taking a little bit of time to load up here because we're on the 1 minute time frame. But this is just something that I will use to show me that yes, we're breaking into this area. I can see that we're breaking into this area with momentum because we've had this rejection wick, we've had 2 green candles, and they're getting bigger. But then you can use the volume footprint to see what is actually happening behind this candle, the buyers and sellers. Yep, it doesn't want to load just now because we're on the 1 minute time frame. But yeah, I have made a previous video on this, the volume footprint, and it's by default it's at buy sell. You can see the buyers and the sellers. I like to just look at the delta, which is the difference between buyers and sellers, and there is a video on this on my channel, but I'll not go into too much detail on that. I don't want to scare people off because you don't necessarily need it to enter. You can see here the candles got bigger than the previous 2. You can see here we've got a big wick. You can see here we're breaking through this resistance zone. So this is just, everything's telling me enter. Okay, so we enter this trade, and we entered it, and it was a 2.7 to 1. So we'll move on because there was a second trade on this day, and this trade was taken here. Again, we come back down and retested, and you can notice that we're coming back down close to the volume weighted average price. That's where I put my stop loss, just below it. And I've risked here because I've had this good winning trade. I'm feeling good about this. It's on a strong upward trend here, and you know, it's just intuition that I place a trade here, and potentially I've looked at the volume footprint delta and seen a lot of volume coming through at this area, and that's resulted in another 2.3 to 1 winning trade. So let's move on to the next day. We are now on the 10th of June. Again, we have 2 trades here, very similar to the previous. We've got this resistance zone here. This is this little box, struggling to break through. Remember before, the previous day, we had that big move down, this big impulsive move down. Down, and then it went up. You can see that happening again in the previous day. And these are patterns that you'll recognise when you're in front of the charts so much. So we've built the story here of having this resistance area, okay? Then the market absolutely plummets down. Again, we don't take short positions, and then it comes up, huge momentum up, okay? Blasts through the volume weighted average price, blasts through our resistance area, we enter. That is enough for us to enter. Where do we target? We target this pivot point and we lose. So this was a losing trade, but we stuck to our rules. We built a story. We weren't impulsive. Everything checked off in the boxes, and we entered and we lost. And we can accept the loss because it wasn't an impulsive move. The only thing we want is we want to check off the boxes and have confidence entering. What you will find when you do that is you have more winners than losers, and you will start to win as a trader. So here we enter a position. We are very conservative. As you can see, the stop loss is down below the VWAP. Typically I would have that maybe here, and it would have been a 2.7 to 1 trade, but we are on a 1.3 to 1 trade here, just because we're coming off the back of a losing trade. We're liking the look of this building structure, like stairs going up. You know, when a market goes up quick, it usually falls quick. When a market builds structure like this, going up nice and slow, consolidating, going up again, consolidating, usually the market goes up. When you see this pattern, you see all these wicks down here as well, all these big rejection wicks, about 4 or 5 of them. Then we have a move up, we consolidate, we have a move up, we consolidate again, we go through this pivot point, strong momentum. So we then target the next pivot point, and this was a good winning trade. So hopefully it's starting to make sense now. I've seen some videos out there that just, enter on the break of this 30 minutes, and it's just a fast way to lose money. So I thought I would make a video on what I look at and what I am watching. And a lot of the times I will just set alerts here. If we cross this area, I'll sit usually for about 2 hours watching this, and if I don't get a trade, I will set an alert, and I'll get an alert notification to my phone when we breach this area here. So as you can see, we had another nice trade here. We broke through with momentum. This was a 2.2 to 1, and we reached this pivot area. Again, get these pivots on your screen. They are ultra important, along with psychological levels. As you can see, broke through with momentum, and it was a lovely trade. This trade is an average trade for me, plays out in probably certainly less than 20 minutes, less than 10 minutes. So again, we will come to the next day here. And you see we had a trade here. So we're back to the black lines rather than the shaded boxes. But you can see I have placed a line here saying we've got some kind of resistance here. We come back down, break through with momentum, and this was a risky trade because the pivot point only offered a 1-to-1. So the pivot point was here, and the trade was almost a 1-to-1. So the next area of interest for us was either this psychological level or this pivot point, and it was just too far, so we took our 1-to-1. Next trade is probably the only short trade that you will see on here. Again, this was most likely taken because of the delta volume footprint. We'll just see if this will load up again. It really doesn't like the 1 minute time frame to load. There we go, it's loaded straight away. It must have heard me. So just to explain what's happening here, again there's a detailed video on this. So this is a delta. So this basically we'll just delete this here just now. This is basically showing us the buyers and sellers that's behind this candle. If we were to right click and go to settings, symbol, and we changed our delta to buy sell, It will show you all the buyers on the left and all the sellers on the left and all the buyers on the right. I like to just see the delta, and the delta is basically if you've got 3 sellers, 20, it's very small this, so here you've got 20 sellers and you've got 32 buyers, so that gives you a delta, a positive delta of 12. So again, we'll go into settings and we will just change the buy sell to delta. Okay, and as you can see here now, our delta is 12 here, 12. So it's much easier to read. This shows you who's in control of the market. You can see we've got a big negative delta here of 214, which is only on a minute time frame, remember. And again, if you get used to watching this, it can give you entries. There's probably only 1 or 2 entries that I've used on this video here I've showed you with a 10. Probably only 2 of them have been entry off the back of the delta. Most of my entries are off of building that story with these little lines or the little boxes. Okay, but yes, here we entered. Let's just try and bring back the position. Here we go. So this was probably one of our best trades as well, because it was a 5.4 to 1 trade. So that's a video on the New York open range breakout. Common mistakes people make with this strategy, I've covered a few of them before. People enter straight away as soon as you break above. I've seen other videos that say, oh, wait on the candle closing. Really, it doesn't matter if you wait on the candle closing, because the candle can close and it can still reverse and still stop you out. So pay attention to the 1 minute time frame when this open range breakout New York starts, and start building a little story with support and resistance. You can look at the volume, look at the candles, pay attention to pivot points for your take profit or psychological levels, which if we just come to the modern up-to-date time here, you'll see here our psychological level here is at 22,000. We've got another one down here at 21,000, but you can set it up so they're in increments of 100 as well. So I hope this video has helped. If you stick with this strategy, using these time frames on Nasdaq only, using this risk management, not being impulsive, I guarantee you, you will turn a corner and you will end up being profitable. This is what I use on a day-to-day, everyday. New York session is 2:30 PM in the UK, my time. That's when I start watching this. If you want to swing trade, go and watch my other videos on mean reversion. I'm in trades on mean reversion from anywhere between maybe 5 and 10 days they take to play out. And for somebody who's just starting out trading and trying to learn, it can be hard going. Whereas this is good. This shows you within minutes that you're winning or losing. So until the next time, guys, please leave a comment below if you've got any questions. I respond to every video. Please share this with any trading friends you may have. Like, comment and subscribe. Until the next time, please stay safe.